Hello investors, my name is Mike. I'm an average investor trying to share my investment journey on the internet. One of my main goals on this channel is to help you build wealth the right way. In this video, we're going to discuss what Warren Buffett's opinion is on diversification. Is he for diversification or is he against it? One of the things that I have learned in my investment journey is to study great investors regularly. One of the great investors that I like to study regularly is Warren Buffett. Warren Buffett is one of the best investors of our time. Warren Buffett has amassed his wealth not building amazing companies, but investing in amazing companies. Warren Buffett has invested in companies like Bank of America, Coca-Cola, Apple, and he's built an immense amount of wealth investing in these great companies. As of April 2021, Warren Buffett has amassed over $100.6 billion. That is mind-boggling. That is an immense amount of wealth, and he's one of the richest men on the planet. One of the most famous things that Warren Buffett is famous for is that his adherence to value investing as well as to frugality. This man has over $100.6 billion, and this man does not drive a fancy car or live in a mansion. He lives a very modest lifestyle, and what he really makes him happy is just investing in stocks and picking great companies. On the opinion of diversification, Warren Buffett's opinion on diversification is that he prefers to have a concentrated portfolio than having a diversified portfolio. He states that if you know what you're doing, it is better to invest in your number one company than your number 35 company. He says it makes no sense investing in a company that you think is ranked 35th when that number one company could be making you money. And he also believes that in the short term, the stock market is a voting machine, but in the long term, the stock market is a weighing machine.
There's nothing magic. We like to put a lot of money in things that we feel strongly about. And that gets back to the diversification question. We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses.
Why would you invest in a company that is not top ranked? Investing, it doesn't make sense to be investing in underdogs. There are just way too many investors they're sifting through garbage, trying to land a Hail Mary or those moonshot gains, when in reality they should be looking for companies that are increasing their cash flows, building great businesses, as well as returning capital back to shareholders. A lot of these investors are investing in garbage companies that are not increasing their cash flows, and they're going to be stuck with the bill at the end of it. So just kind of building off of that, where Warren likes concentrated portfolios, yes, he likes to invest in concentrated portfolios if you know what you're doing. If you don't know what you're doing and you're investing in trash companies, he advises you to actually invest in index funds. Just kind of beating the dead horse off of that first point is, again, why are you investing in your 35th ranked company when you could really just be putting a concentrated position of cash in your number one ranked company where you know will actually make you money? So Warren Buffett does believe that it makes more sense to invest in a concentrated portfolio, and that's actually one of the main drivers of him building his wealth so fast, is because early on he didn't invest in an entirely diversified portfolio. He invested in concentrated positions that ultimately now he's diversified because he's built an immense war chest worth of money where he can put extra cash into different positions. But early on, Warren Buffett was investing in a concentrated portfolio strategy. There's a handful of companies that are responsible for most of the gains in the stock market. So take a look at the S&P 500 or take a look at the total US stock market index. The top 10 companies are responsible for the majority of the gains of these indexes. If you know what you're doing and you pick these companies early on, you could have invested in these companies and had immense amount of returns instead of just investing in the total market. The most dominant companies are the companies responsible for most of the gain in the total market indexes or S&P 500. Why are you going to invest in 3,500 stocks when you can pick the 10 that are responsible for the highest return? So keep that in mind. Whenever I make these videos on YouTube, one of my biggest things is I want to be as transparent as possible. I don't want to be this guy in the internet who is like some self-proclaimed guru who knows exactly what they're doing. I do not know what I'm doing, but what I do know what I'm doing is, like, I am learning regularly from these investing greats. I study them, I follow everything that they say, and I try applying it into my own investment portfolio. In one of the biggest positions that I have is a company called Tesla. I have a concentrated position in a company called Tesla because I believe in 3 factors and why this company is going to dominate going forward. Number 1 is branding. Branding is one of the most important. You think of electric vehicles, the first brand that comes to your head is Tesla. One of the second reasons why I have a concentrated position in Tesla is because of the leadership. I believe that leadership is very important. I read this book about Navy SEALs, and one of the things that one of the Navy SEALs instructors said is one of the things that Navy SEALs do is they have these boat races, and whoever wins one of those boat races, they get to rest. So, they have this slogan, it pays to be a winner. And there was this one boat crew that was constantly dominating, like would win every single boat race, and they would be resting all the time. And there was this one other boat crew that they lost every single time, and like they had to do like extra push-ups and like burpees and stuff like that just to get punished for being losers. And what these Navy SEAL instructors did is they took the leader out of the number 1 boat crew and they put them into the last boat crew, and they took the leader from the last place boat crew and they put him in the number 1 boat crew. That boat crew that was in last place, they started competing with the first place boat because they had a really good leader. Leadership is extraordinarily important in the business world. Is you have to have the vision and the know-how of like where you want to take your company. Elon Musk has completely laid out a roadmap of exactly what he wants from his company, and people have been sleeping on it. People don't even think he's going to get to this point, even though he laid out a roadmap in his part 1 master plan of building Tesla, and people are still sleeping on this company. Elon Musk is the lead engineer of SpaceX. The man is brilliant. He has a degree in physics and business. This man knows exactly what he's doing. There's a lot of controversy of him being too vocal on Twitter on certain things, but from like an actual technical standpoint, the man is brilliant and he's a genius, and that's the type of guy you want running their company. Same thing with Jeff Bezos. You have Jeff Bezos. The man had a vision of what he thought Amazon was going to be. He initially Amazon was just selling books. Like, no one thought that it was going to be the conglomerate it was today, but Jeff Bezos had that vision. Let's talk about Steve Jobs. Steve Jobs had the vision of building Apple to what it is today. He built every single pipeline of like what the cell phones are going to do, iPads, even switching over to like a subscription-based service. He was the one that envisioned all of this, and then the CEO of Apple now is in his footsteps, in Steve Jobs' footsteps, to execute on the plan that Steve Jobs did. It is important to invest in companies that have revolutionary CEOs, because these are the type of people that will not fail. Jeff Bezos is not going to fail, Elon isn't going to fail, and the CEO of Apple is not going to fail, because they have all a vision of what their companies are going to go for. And my third point of why I have a concentrated position in Tesla is because they have the best products in the world. They, hands down, have the best electric vehicles on the planet. You can argue that the competition is coming and here or whatnot. It doesn't matter. The products that Tesla is going to produce, that they are producing, are substantially better than any other products in the world. They have the fastest cars, they have the best battery range, they have the safest cars. There's nothing else to compete about. And on top of the point of making amazing products, Elon Musk can attract the best engineering talent in the world. If you do a quick Google search right now, it's like, what are your top prospects, or where's the top place that an engineer is going to work? It's either Tesla or is it SpaceX, and they just flip-flop back and forth. You are getting the best engineers in the world to create products for your company. This is an edge that a lot of companies are not going to have. Not every single mechanical or electrical engineer is trying to go to Ford or Volkswagen. They want to go to Tesla or SpaceX. This is a huge edge that a lot of people are missing. And then the fourth thing is their product pipelines are just immense. If Tesla, right now, if Tesla executes on the exact plan that Elon Musk is doing, they're going to want to sell 20 million cars by 2030. The average selling price of a car today for Tesla is $40,000. I believe that in the future, by 2030, the average selling price of a Tesla will be cheaper. But if $30,000 is the average selling price of a Tesla today, and they're going to be selling 20 million cars, just off revenue of selling the vehicles alone is $600 billion. The top two companies, the top two revenue generating companies in the world are Amazon and Walmart. Walmart generates like $500 billion, and then Amazon generates $400 billion. So in 2030, Tesla's gonna be generating over $600 billion just selling cars. I'm not talking about the profitability or anything like that, but just pure revenue. People are sleeping on this. And on top of that, they're gonna have a robo-taxi fleet, as well as they're gonna have a high margin software business where they're gonna turn on their full self-driving, and guess what? We're gonna be paying $200 a month for our cars to drive themselves. People aren't realizing it, but they're gonna flip that switch, and that's gonna add another $100 billion worth of revenue on top of the energy business that has just started. When you look at that, the top revenue generating companies, look at the top 10 and tell me how many oil and energy companies you see there. There is a lot of oil and energy companies there. Tesla is going to disrupt all of those companies, and they are going to be one of the first trillion dollar revenue generating companies in the world. I'm telling you right now, this is the way forward. But this is the vision that I see for Tesla, and this is why I believe that Tesla has the edge going forward, and this is why I'm comfortable having a majority of my money in a concentrated position in Tesla. I laid it out on this Excel or this Google Sheets over here, and pretty much like I have a decent amount of money in a Roth IRA, so does my fiance. We both have our 401ks. So we decided as a couple that, you know what, it does make more sense to put a little bit more money in these concentrated positions. So because we are investing in a diversified manner, like about 50% of our assets are in a diversified manner, we think that it's okay for the other 50% to be in concentrated positions. Now, do I recommend that everyone should have 50% in concentrated position, 50% in diversified assets? No. I think realistically, like for the average person, I think we should have like 80% in the total US stock market and the total international market. Set that, put that 80% aside, and the other 20% is to invest in like options, is to invest in these concentrated portfolios. But it is what it is. And I am just an average dude sharing his investment journey on the internet. So, if you disagree with it, great. Let's have a dialogue. Let's talk about it in the comments. But going forward, I believe this is the way forward, and I'm going to be posting these videos as regularly as I could, just to kind of keep seeing if it's growing or it's going to tank. Like, I want absolute total transparency. But just to kind of sum up everything, Warren Buffett believes in a concentrated portfolio. If you know what you're doing, if you don't know what you're doing, then invest in index funds. I hope you all have a great day. You take care, and I'll see you in the next one.